Total International Bonds ETF. First off, read this disclaimer carefully and do your good deed of the day by and subscribing. So we have Total International Bonds here, basically at the 52-week low, and we have seen a minus 3.57% pullback. Okay, so we jump right here into the charts. Weekly data points. So this is definitively, big picture. Okay, I did find these time cycles that have been rather good at calling the rise and decline phases. So now we are currently testing the very important red 200-week moving average. Given that it has offered support all the way back here into 2018, we would have to give the benefit of the doubt to the bulls. This is simply too good of an opportunity to them. So this is simply not a favorable setup for a short. It just isn't. Especially given that we also here have these clear time cycles, and guess what? The time cycle is calling for a rising phase here right around the corner. So that's the long-term technical setup here, weekly data points. Going here to the dailies, you could argue that, when you look here at this black line, we do have something that could turn out to be horizontal support. So on the daily data point, we have support as well. When we look at these other, indicators, looking here at, the RSI, the previous time we had this low RSI level, like here, that called this major low. Further back, we had this major low, so the RSI is also screaming that this could be interesting from a more bullish perspective. Distance from the 20-week, 50-week, and 100-week moving average also is at a level that has called lows in the past. Going to the daily data points, we have a bit of a similar message, and what is especially interesting here is to look at the accumulation distribution. So if you look here, so here you can see, this arrow on both the left and the right side. See how consistently here accumulation has increased. So there are definitively buyers, which is, bullish. Okay. Then we look at correlations. So long term, there's a 36% positive with the S&P 500, 67-ish% positive with the 20-year Treasury bond ETF, American bonds, and then there's an 81% positive with the investment grade corporate bonds ETF, LQD. Then there's a minus 23-ish% negative with the dollar index. Short term, 34% here with the S&P 500, 69% positive here with the TLT, 68% positive with the LQD, and minus 21-ish. No. It actually is positive 21 here with the dollar index. So that's a key difference here from what we saw here long term. Okay, then we go here to seasonality. Over the last 5 years, November and December tend to be bullish. Then over the last 9 years, so November, December, they close, the BNDX close higher 63% of the time. January is also, a 63% month. And then February is one of the strongest months. So the coming months are favorable for the bulls. Then we go to Finviz. They have found a double bottom that is bullish. There's increasing numbers of factors here that are pushing us in a more bullish direction. Then we go here to the yield. So we compare the BNDX with the S&P 500. So even though the BNDX, it's a bond market ETF, the yield at 1% is less than the 1.25% you get from the S&P 500. But the beta is massively different. You have basically a 1 beta here for the S&P 500 and a 0.03 here for the BNDX. So way lower beta. So there's definitively less risk in well, less volatility in the bond market. If you go a bit here and look at the holdings, then we can see where the bonds are from. So we have 6,367 holdings for the BNDX. That's big, obviously. You got France, Germany, Italy, Spain, a bunch of that. So you see here that 76% here is sovereign bonds, and then you have around 20% corporate. So even though the BNDX is called the Vanguard Total International Bond ETF, the BNDX tracks an investment-grade non-USD denominated bond index hedged against currency fluctuations for US investors. So it's a kind of a bit odd because when you see the name Total International Bond ETF, you have good right to assume that this gives you exposure to all kinds of bonds across the planet, but this is ex-US, so that's very bad, frankly, and this is a major issue. Major issue in the whole ETF market. There is not a strong link between the name of an ETF and what it actually contains. This is a huge issue, so you really gotta look under the hood. And this is actually kind of a grave example because, everything in this name would make you assume that you also get exposure to American bonds. Yeah. This is certainly one of my pet peeves. And this is also one of the reasons why I made these megatrends, as you see here, and a bunch of other, thematic portfolios, because you might think that, as an example, the food and beverage ETF would give you clear exposure to food and beverage stocks, but then you look under the hood and you see that there's a bunch of companies that aren't pure play food and beverage stocks. And the same thing with, all of these other themes. It's a huge issue, Okay, so if I were to sum up my take here for the BNDX, we are at a very clear support level that pushes me massively in a bullish direction. If that support level were to fail, then that would obviously be bearish because the seasonality pushes us in a bullish direction. This is also very low beta, and the correlations were also interesting. So yeah, bullish take here.